Durham Region home prices are down almost 86,000 compared to last December, but they actually ticked up compared to November. So if you're thinking about moving in 2026, are we heading further into a deal zone or have we already hit the bottom? Let's break down exactly what this means for you in the Durham region, city by city. I'll walk you through what changed month over month and what changed over the whole year. And most importantly, what this means if you're buying or selling in 2026 in Pickering, Ajax, Whitby, Oshawa, or Clarington. If you're thinking of a move in 2026, all of my contact information is in the description below. You can call or text or book directly onto my calendar. So first, let's look at the big picture and what happened year over year. The average price across Durham dropped from about 930,000 to about 844,000 in a year. That's roughly an $86,000 drop or just over 9%. For buyers, this could be your opportunity. The same type of home is effectively on sale compared to last year. Your down payment stretches further and qualifying for the stress test gets a little less painful. For sellers, this is a reality check market. Pricing off of 2022 or even early 2024 highs will sit you on the market. You have to price based on where buyers are today, not where your neighbor sold a couple of years ago. The median price slid from 855 to 795,000, a drop of about 60,000 or roughly 7%. Median tells us what the typical buyer actually spent. So this confirms that buyers moved down a step in price point, choosing more affordable options or more modest homes. Active listings climbed from 1,242 to 1,424, and terminated listings jumped from 341 to 414. That's over a 20% increase in failed listings. More choice for buyers and more evidence that overpriced homes are getting punished. If you overreach on price, you're much more likely to end up canceling and relisting. Days on market went from 30 to 38, and the sale to list price ratio slipped from 100 to 98%. So homes are taking just over a week longer to sell, and on average, they're selling slightly under asking. Months of inventory stayed at 3.1. That still keeps us in a balanced market. So this is not really a crash, but it is a much more normal negotiation-heavy market. But there is one massive statistic that we need to talk about, and it explains exactly why the market feels so quiet. Sales volume. In 2025, there were only about 62,400 sales in the GTA overall. To put that in perspective, this is the lowest number of sales we've seen since the year 2000. Think about that. Back in 2021, at the peak, that number was at about 127,000. We have effectively cut the number of transactions in half. We're seeing sales numbers similar to what we saw 25 years ago when we had nearly 61,000 sales, despite having a much larger population today. Why? A recent Bloomberg article points to economic uncertainty as the main driver. A lack of household confidence mixed with ongoing trade tensions with the US has kept many buyers on the sidelines. Now, the condo market is experiencing the biggest correction. In fact, it's described in that article as being in a recession. This isn't as much of a factor in the Durham region specifically, since we are more single family home focused, but that general economic anxiety is affecting everyone. Now, a month over month snapshot from November to December, the average price in Durham nudged up from about 841 to 844,000, a tiny 0.4% increase. So even though the year over year story is down, the very short-term story is stabilizing. This suggests we may be hovering around a floor rather than continuing to slide quickly. New listings dropped from 1,186 to 529, and active listings fell from 2,154 to 1,424. That's classic December behavior. Lots of sellers hit pause for the holidays. Buyers who stay in the market at that time are definitely a lot more serious, but they usually have fewer options. Sales went from 622 to 455, but months of inventory improved from 3.5 down to 3.1. And the sales to new listings ratio jumped from 52 to 86%. In November, the market felt sluggish and a bit oversupplied, but by December, fewer new listings plus steady enough demand actually tightened things back up. So again, this isn't a dead market, it's a slower, more selective one. Days on market did jump from 30 to 38. The homes that are selling are taking longer. The buyers who are out there are cautious and taking their time, which you can feel if you're on the market. So who felt it the most? Whitby saw one of the bigger moves. the average price dropped from about 1.1 million to about 948,000. That's over 159,000 or about 14%. If you were priced out of Whitby last year, 2026 might actually be your chance to get in. Clarington also took a noticeable step down from about 889 to about 780,000, roughly $110,000 difference. That's huge for move-up buyers coming out of Oshawa or from Toronto. Ajax is the interesting outlier. Average prices actually ticked up slightly from about 916 to about 921,000 year over year. That tells me there's still strong demand in certain pockets and price points. And it also reiterates how important it is to look at your neighborhood and home type. You can't look at Durham Region overall and make decisions based off of that. You need the specifics from your area. So big picture, prices are lower than last year, but slightly higher than last month. Inventory is higher than last year, but tighter than November. And buyers and sellers are negotiating again instead of just reacting. Now, looking ahead to the rest of 2026, a big reason prices feel so down right now is because of just how fast they climbed during COVID. From early 2020 to early 2022, average home prices in Durham jumped by roughly $500,000, a surge that simply wasn't sustainable. What we've seen since then isn't necessarily a crash, but a correction followed by a long pause. By the end of 2025, average prices were only slightly lower than where we were back in early 2021, which suggests that the market may have already done a lot of its adjusting. That same Bloomberg analysis forecasts that prices will likely continue to decline or soften in the first half of 2026, with a recovery expected later in the year. But, and this is key, that recovery is contingent on improved economic certainty, stable employment conditions, and reaffirmed international trade relationships. So heading into 2026, I'm expecting more of a sideways market, more balanced, negotiation heavy with modest movement rather than big swings. If interest rates ease or even just stay stable, we could end up seeing more buyers willing to step back into the market. For buyers, this likely means more time to think, more choice, and room to negotiate. For sellers, it means homes that are priced right and marketed well will still sell, but for the most part, the days of throwing a property on the market and selling it in 3 days are behind us. The key takeaway is this: the market isn't broken, it's just more balanced. And strategy matters more now than it ever did. If you're thinking of buying in 2026 and want to know what this market shift means for your budget and the city you're hoping to buy in, you can book a quick strategy call. I'll link that down below. And if you're a seller, I can show you exactly where buyers are still paying strong prices and how to price to sell without leaving money on the table. Don't forget to subscribe so that you don't miss any of my future videos. Thanks so much for watching, and I'll see you in the next one.